We saw a nice pump yesterday with Bitcoin now at $86,500, and the question still remains, can you trust this pump, right? So in today's show, we're going to discuss exactly that. You can see a lot of the coins are bouncing really nicely. Even crypto.com up here, massive 33% on the day, bear chain up 15%. So there are some nice moves. We are getting a little bit of a pullback on some of the coins, and this may present an opportunity. Stay tuned until the very end of the show. I do have a couple of trade opportunities for you. I'll show you the Bitcoin trade that I'm looking at, which could play out as soon as today. We'll talk about the high time frames, the stock market as well. Smash the like button, hit the bell notification, and subscribe to the channel if you're not already. We have been crushing it in Whale right? Shout out to 𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪😅 one of our coaches over there, who got so many long trades, absolutely crushing it over there. So for those of you in Whale Room, big congratulations on that. But let's talk about the markets. Let's talk about, have things shifted in the high time frame, or are we still in trouble? Because there are some warning signs there, which I think that many are missing, but we still need to pay attention to. Remember, in trading and in markets, there's multiple different time frames, which means you theoretically could be long and short at the same time. You can take low time frame long trades towards the upside, exactly like we've done, but the high time frame trends could still be towards the downside, which are of course going to affect the overall investor's pocket, right? So let's get into it, right? This is the S&P 500. Remember the big bearish divergence. We said that in a worst case scenario, you revert back to fair value. Fair value in the stock market is always going to be a high time frame moving average, like the 200-week moving average, and that's your fair value. That is currently rising, right? So if it takes time, you know, this moving average could easily catch up to the big box that we have over here. You might see a bit of a range develop on price action over here, and over time you gradually put in lower lows and lower highs, and it could take a number of months as the stock market grinds down towards those low levels. The stock market typically doesn't operate in an as volatile and aggressive manner as what the crypto market does, right? So these are the zones that we're looking at. The question is, what is price going to do? Of course, is price going to follow the green trajectory over there, or is it going to follow the red trajectory? The job of a trader is to work out the risk to reward at each of those relevant places and play it in both directions and eliminate the risk by moving your stop into break even as quick as possible, and then let the market decide or dictate the direction, and then you sit on the free ride, right? So ultimately, what are we looking at? Well, if it is going to follow the bearish trajectory, then you would expect the stock market to show some form of weakness anywhere around here between 5,840 up to about 5,900, which is pretty much leading into where the breakdown level occurred. If you do see a lower high that starts to form over there, then there's a possibility that you're going to follow out the red trajectory, and then we'll revisit this when more relevant, but I'd be targeting 50% of this wick that occurred all the way back in the August time period, where the stock market put in that August low. You may come back to capture some of that liquidity. Markets prefer to be balance in terms of efficiency. So when there's inefficiency in the market, also known as large abnormal candles towards the up or the downside, or big long wicks that you see within the market, price, especially on a high time frame like a weekly, will oftentimes revert back to that level to fill that as an efficiency, right? Taking it from inefficient to an efficient market, and that's where you see those backfills into the gaps or the wicks or the big abnormal candles. So that is the one path that price could follow, right? I'm going to show you the one thing that many people are missing within the market right now in just a moment, so stay tuned. Alternatively, even if it were to follow the bullish path, at the very least, I would still expect a rejection from that breakdown level, which is around that 5,900 region. You can see this big candle over here, and consequently, it makes sense to play the short side off of that rejection, and if it forms into a high low, then great. Now you retake the long, close your short trade, and you continue on up. Now, what is the one thing that many traders, investors, etc. are missing within this current move towards the upside? And it's something that we warned of a long time ago. We said, watch as the market bounces, expect that there will be some form of a recovery in the next coming weeks, but watch to see what happens with this one indicator. And that one indicator is, of course, the volume, which the volume still is continuing to decline over here. And if this is going to be a V-shaped recovery and you're going to aggressively move out of the zone over here, you want to see the volume spike up aggressively with price moving towards the upside. And that would show you that this is truly a strong strong recovery and a V-shaped move which is happening, right? So what does this mean? What this means is that right now, it's increased likelihood that you're probably going to reject from that golden pocket, anywhere around the 50% level to the golden pocket. We're approaching the 50% level. We're probably going to hit it today. If it's aggressive as aggressive as yesterday's move, you might even hit that golden pocket later on today. Now, you want to look for any form of weakness around there. Remember, you never blindly just short a position. You need to have a trigger plan on a lower time frame to get into that trade. If you do want to learn more about that, by the way, guys, remember there's always that link in the description below. It will take you through to Whale School over here. Click that link. By the way, in this Whale School, we are doing something special, right? We're going to be building a $10,000 portfolio, which I did tell you a couple of days ago. I said that it's going to line up just perfectly with where the market may find a major bottom. I'm going to show you something on Bitcoin as well today. Pretty significant. So for those of you that want to join, use the link in the description below. Remember, any of those exchange links qualify you for a user ID. The user ID is qualifying you to enter into this course for free. You don't have to pay the $1,900, right? All right, so that's the volume. That's the one signal that we're looking for, is the volume, right? We still played the long side. This is what I'm talking about. You look for the risk to reward. There's our Tesla trade in profit. We spoke about the bottoming candles on the weekly time frame with the 3 touch points over here on your RSI price, or at least the RSI hitting that trend line and bouncing off, which is each of the prior times in early 2023, as well as this August time period over here, led to those massive moves towards the upside. We got the same thing, right? So that's the Tesla trade. I think this is safe to play the long trade up to about $353, possibly even $400, and then you can start to take some profits over there. The other one that I'm looking at over here is Coinbase. I have restructured this chart ever so slightly just to see where the lines of best fit are, and this has got this parallel channel rising towards the upside. But similar to the stock market, it is coming off bearish divergence with your RSI downtrending. Price had been putting in high highs, RSI putting in lower highs, and usually that is a sign of bearish divergence, which means that you need new momentum and new interest to come back into the market. And sometimes price will correct for a longer period of time while it resets those bases, right? So are we still in a bull market, right? I guess that's the question. Are we still in a bull market? You can actually vote. There's a poll. There it is. Are we still in a bull run right now? Vote over there. Yes, absolutely. Or no, the markets are gay. Please vote over there. Let us know what your thoughts are. For the rest of the people that want to put their money where their mouth is, well, you actually can go to Polymarkets where you can see people are voting over here. And right now, they're voting. There's a 64% probability Bitcoin will surpass $110,000 in 2025, which I guess, according to them, means they still believe that we are in a bull market, right? So food for thought. Now, there has been one interesting signal which has just played out. We're still waiting for the volume to play catch up on the stock market. We're waiting for the volume breakout in crypto, but there is one signal that just printed, which will drastically increase the probability that now we are still in a bull market, and that this was not a left translated cycle, right? What are we looking at? What are we looking at? What is that one signal? Well, the one signal, we did highlight this. We brought it to your attention a couple of weeks ago already, and we said sooner or later, after you get a minor capitulation signal, you will get something called the hash ribbons buy indicator signal over here, which is now officially printed. However, the trend is your friend, right? And price action comes first and foremost above anything else, above any indicator in the world. Price action is the most important thing. And what is the price action telling you? Well, you are still in a downtrend, right? This is quite literally a downtrend. Anybody who's willing or wanting to debate this, I welcome your debates, because this is just a series of lower lows and lower highs and lower lows and lower highs. And this is a downtrend. However, if you can match up the low time frame downtrend to meet up with a high time frame key area of support, and you have a signal like this, then you can start to work these things together to look for confluence and look for trade opportunities. Now, what is the trade opportunity over here? Well, if we do reject, right? If you do reject again, because now we've touched into this, let's see, essentially since it started 1, 2, 3, for, this is your 5th attempt into here. If you do get a proper rejection and you drop all the way down over here, I would be looking at this fair value gap. This is your daily fair value gap. I even took the liberty to write it onto the chart for you to make it dead easy for you, right? $72,489 is the level that you're looking at. That would be the absolute penultimate sweet spot to buy Bitcoin despite the downtrend. That's where I would be looking for a massive reaction, right? And given the buy signal is just printed over here, the buy signal does not mean that you simply just blindly buy exactly on the spot. What the hash ribbons buy indicator suggests over here is that it's very unlikely that you're going to take out this low on a closing basis. The most recent low. This is the most recent low, right? The most recent low is where price came down into the zone over here, which is $76,000. So can you go past that level? Yes, you can. What it suggests is you shouldn't close below that. So I could imagine if there was a massive rejection over here and price had to fall towards the downside, and then you suddenly started to get a sharp reaction back towards the upside over here and close above, the hash ribbons indicator would have still done its job. Now, I believe in its history, we've only seen the hash ribbons indicator fail one time. Now, there's a couple of interesting things that we can line up over here, right? Prepare your accounts. That's the first thing, right? Prepare your accounts. Make sure that you have capital on your exchanges and you're ready to take the trade, right? So if you do want to do that, Bybit is one of the places, of course, where we have the Legends of Trade VIP Arena. In the next 5 days, you still have the chance to try and win that competition where you can win, I think it's $1 million prize pool, right? $1 million prize pool. If you look in the link in the description below, there it is, 1 million USDT, Bybit Legends of Trade, right? So join in. They do a lot of different competitions over there. Sign up, use the link. That will also consequently get you into whale school. Now, what are the things that I'm looking at over here to tie in with that? Well, the first interesting thing is we've officially had a break of your downtrend here in the RSI. The weekly RSI, however, has not broken its downtrend, right? That's one thing that suggests in alignment with the trends are still down. That's a big and an important thing to break above, right? But the fact that the daily has broken this is an early sign that maybe something is different and starting to change, right? That in alignment with the hash ribbons buy indicator is a good thing. Now, again, it doesn't mean you just blindly buy on the spot. You wait for those low levels. You wait for the pullbacks. I'm going to give you the exact zones, even for a low time frame trade, which may play out as soon as today. So stay tuned. Now, you'll notice on my chart, I have a big red vertical line that's running across the screen, right? Or down the screen over here. That is dated for Saturday, the 29th of March, right? This is a very interesting date. Why is it an interesting date? Well, you guys have seen it play out time and time again. That is on Saturday. It's the bear moon, right? We had the bull moon. It did its job. Again, surprise, surprise. We had every single moon. Bull moon, price goes up. Bear moon, price goes down. Bull moon, small move up. Bear moon, price goes down. Bull moon, price goes up. And now we're going to be printing the next bear moon. So maybe, just maybe, with this hash ribbons buy indicator, we don't close below that low, but we do drop down into the fair value gap at $72,000. That will be an absolutely beautiful, amazing long-term buy opportunity, because this drastically increases the probability that the bull market is still on and that the poly market voters over here, or bettors, are going to be correct. Let's see your poll results. 69% of you believe we are still in a bull run, right? So we'll see. Only time will tell if it is correct, right? These are starting to shift the odds. But why have I also selected this date? It's not only because of the bull moon, but what's interesting is very soon after that, just a couple of days later, we do have something important happening within the traditional markets. April the 2nd is the next big tariff deadline, right? And we will see what happens over there in terms of the at least tariff wars that are taking place. Maybe that in conjunction with the bear moon coming up will create the last bit of fear in the market, drop price towards those low levels. We'll get a big divergence, because maybe the RSI will print a bullish divergence over here. It will still hold up, right? We'll see the RSI do something like that, right? Bullish divergence. Price will create that lower low and drop down into that $72,000 level like that. And there will be a divergence with the fear and greed, because I don't believe that the fear will drop down to lower levels than what we saw over here, right? So we will have, I don't have that on this particular chart, but you can just imagine the fear and greed reach like 12 over there, and now it's sitting at like 40. And if it drops down into a lower low, maybe the fear and greed over here ends up being at like 20, right? So it was a 12 there, 20 there. That is a divergence, right? A divergence between price, a divergence between the RSI and the fear and greed. And that becomes a very, very strong buy opportunity coming into super key support. You can see again, in conjunction with the stock market, the volume continues to diminish, but that next move down, I think, should bring some massive volume back into the market. So I got your white line highlighted over there. That is, again, the fair value gap. Fair value gap taking from the midpoint. That's where we target that fair value. We're still struggling to break through the high volume area over here, and you can see the volume declining. And FOMO is building into the resistance as it always does, right? So there it is, daily exchange volume continuing towards the downside, lower lows and lower highs. We have not yet turned a corner, but I do believe if we do come back down into those low regions, you may see a shift. You can see even off of yesterday's move, right? It doesn't take much money to move the market when everybody is left, right? Which means that if one big player steps in at that 72K level, huge volume will come into the market, and that could be the shift that's needed, right? So that's what I'm still looking at. I'm still looking at that 24-hour rect volume or levels over here, still 200 million. This is very, very, very low, very, very low amounts, right? So I think that next move down, if we do get it, don't know yet. I'm not 100% sure. Price could easily grind up, but that's something that we're looking at. If you do get that, that could bring a massive amount of at least liquidations on the long side, and that could be the final flush and reset that the market needs before continuing. So here it is. Yesterday we spoke about this. I said be careful longing into that resistance, and that's exactly what happened. Most traders were longing into that resistance. You can see over here the build up in price, the build up in open interest, the funding rates going positive. And what happened next? Well, price obviously dropped almost 3% over there. So high leverage traders did get flushed out of those positions. So we can monitor this today as price moves into key levels. You can see liquidation levels as well are becoming larger on the bottom side versus the top side. So that shows you that there's more pain if the longs get shaken out one more time, right? So keeping an eye out on this. This is now raised from 20 million yesterday to 30 million. It's still relatively low, right? Compared to what we've seen in the past. That's just a product of the market being so low in terms of volume, right? So we'll keep an eye out on that with the liquidations. This is supported in the Whale Room Discord as well. When you look at something like this, this shows you the deltas. The deltas are net positive, which means the majority of people are long right now within the market. Okay, cool. So what is the trade opportunity? If you can flush some of those longs, here's your trade opportunity. You should be able to find this across the board with the majority of coins. We spoke about yesterday the Monday range forming, right? So here's your Monday range. There's your Monday high. There's your Monday low. I said what we may be doing is simply just setting in the Monday range. Now, there's the trade can go both ways, right? What you're looking for is once the Monday range is set, you're looking for the high or the low to get swept. Once the high or low gets swept and deviated, this is where your trade opportunity comes into play, right? So it would look something like this. If the low gets swept, then you're looking for longs, right? If the low gets swept like this, now you're jumping into longs on the deviation. If you get the deviation, you enter in on the reclaim of the Monday low. Your stop loss goes below wherever those wick lows had been set, and you trade this up to the Monday high, and you leave some on the table for the previous month's mid, and you leave some on the table for the yearly open, right? That becomes a pretty sizable trade opportunity. So we're both long and short, right? We can take the trade both ways. Therefore, it would look something like this. This would be the trade opportunity, right? You'd be looking at a 4-to-1 risk to reward ratio, but of course that would be slightly skewed because you're going to take the majority of your profits into the Monday high. That's the long trade, right? If you want these trades when they happen, please do jump into Whale Room. There is a link in the description below. You can see our traders have been absolutely crushing it over there. So congratulations to each and every single one of you that are making your daily bread. Well done. All right, so we will drop those trades in the Discord, right? The alternative option is going to be this, right? If you don't take the long trade, but the short trade instead, because price you might see this happen today, right? You might see that open interest reload building towards the upside, funding going incredibly positive, which favors the shorts in the short term over the low time frame. Then you start to look for the short trade, right? Which would look like this, right? Into that trend line, another build up in open interest, sweep back below the Monday high, back into the trading range, and you enter into the short trade, right? Stop loss goes above here, above wherever those wicks are. You can target down to the Monday low, and then you can start to target probably down into some of these key lows over here, which is going to be around $80,000, right? That's your short-term trades. Remember, we're talking to different time frame people. We got the super high time frame people. Trends remain towards the downside. For that, you need to see the RSI break out of the weekly downtrend, right? Then you got the more low time frame or mid time frame traders. Those of you that are trading over days to weeks, you're going to be looking at the daily chart. I've clearly highlighted the daily chart. Your absolute best buy opportunity is going to be coming in at that $72,000 region. But I would encourage you to still look for long opportunities using the low time frame like the 4 hour in the event that you don't get to that 72, and this can flip into a swing trade, right? So if you sweep the Monday low, personally, I'm going to be looking for a long trade with size, right? I'm going to take it as a sizable trade. And then I'm simply going to eliminate the risk. So I'm going to take it like this. I'm immediately going to move my stop into break even. And if this continues to run up and break out completely, and maybe that's it, maybe that's the end of it and that's the low, my plan for a low time frame trade has now repositioned into a swing trade, right? This is the way that trading works, right? You place multiple different bets and you see which ones are going to work out. And if it looks like there's more evidence building, like volume starts to spike, right? This would be evidence building. We take the low time frame long trade, but maybe, you get this massive guard candle up to $100,000 with absolutely giga-chad enormous green volume over here. Then we leave that short-term trade and we say, cool, let's leave that as a swing trade. Like, no need to close it anymore. Things have changed over here, right? That's why we look for trade opportunities in both directions. So you're going to see this across the board, right? You're going to see this as well on ETH. For Ether would be exactly the same thing. If you saw price come down over here, sweep the Monday low, reclaim back into the trading range, you look for the long. If you see it do this, break above the Monday high, but sweep back down, well, that's where you look for your short trade opportunity. So that is something that any of you can use throughout the rest of the week, right? Here's your SUI trade. SUI has broken this long-term downtrend. This is what we had been looking at over the last couple of weeks, right? There's your long-term downtrend. Not only has it broken that, but you've also broken back into the, or at least you broke temporarily above the previous month's low. This is a good sign, right? Which is why if you start to see SUI come down as low as this, break below the Monday low, reclaim, this becomes a really, really high probability, great trade that can seriously squeeze, right? When you see a short squeeze, these short squeeze can move in big ways, right? So those are some of the trades that we're looking at over there. What I want to mention as well, quickly going back to Bitcoin over here, you can see the confluence, right? Have a look at the confluence over here. If you look at the confluence of price sweeping that Monday low, which is at about $85,000, and we line that up over here as well simultaneously with the moving average, the 200 and the 50, which has been rejecting price throughout. Well, where is that 50 EMA? The 50 EMA is captured at 85K, right? So sweeping the Monday low and reclaiming it would be the equivalent of sweeping the 50 EMA and holding it, which creates that price squeeze, right? As price squeezes into those EMAs, gets tighter and tighter, a big move is coming, right? And you want to be positioned into that before it actually happens. So that's what we're looking at over there. Another interesting thing taking place, which is something different, right? What are the different things that have happened today, right? The different things is we got the hash ribbons buy indicator. The other different thing that's taking place over here is you can see this upsloping trend line, which is held for a very, very long time for Bitcoin dominance, has started to break. We got an early warning sign of something happening over here when we saw the 9 and 18 exponential moving average starting to roll over the cross between the white and the yellow, and it's starting to flatten out on the yellow. The white's already angled towards the downside. This could easily roll this over, which is where your altcoins will start to do well, right? And that's why I'd be looking for things like, Sui, Sonic. These are fundamentally strong coins that I believe will do very, very well. It's not the only one. There are other ones, right? I wanted to highlight this. I made a tweet about it. You can go and have a look. I actually linked the tweet over here. If you go into the description, you can go and click on that if you want to go and have a look a little bit more at that tweet. Let's just see. Here it is. Archeum, right? Archeum are having, they're going to be listing very, very soon on CoinList. Have a look at this tweet over here. I think it's very, very interesting because we know how traders constantly get wrecked. They know where your orders are, right? This is how we get to at least publicize this information in terms of where traders' stop losses are, where traders' entries are, right? And what these guys do is they protect you against that front running, right? Market makers like Wintermute front run the retail traders. They use that on-chain data. They can show exactly where all of your levels are. And we know how they manipulate the markets towards both the up and the downside, stop hunting you, liquidating traders time and time again. And this is where we'll actually see these big moves, by the way, is again going back to this chart over here. When the 24-hour liquidations start to become too low and there's not much going on in the market, this is where these guys step in, these big market makers, and they pump price or dump price, wrecking you. So if you want to protect your orders, right, this is essentially what Archeum do. How do they do it? They have dark pools for DeFi. Essentially, you can take extra large trades without any market impact, without seeing anything, no front running. So hiding your orders over there, stealth accumulation if you want to build massive positions. So if you're a big trader out there, go and check them out. Brand new, they're just launching today. Cross-chain arbitrage, private trading bots, hidden liquidation, secure OTC deals for anyone that wants that. And it is linked below in my tweet, right? Their public sale for anyone that wants to participate starts today, right? And that's on CoinList. So you can go through. These guys have absolutely enormous backers. If you look at some of their backers, let's just scroll through to the bottom over here. You can see they have the likes of Anatoly from Solana. You have Mert from Helios, Meow from Jupiter, Balaji, which we know is famously calling for, I think, $1 million Bitcoin. So a lot of big names over there. Use the link over there if you want to go and check my tweet and follow me on Twitter. All right. Other things I want to talk about as well, right, is the USDT dominance. Now, USDT dominance still has some work to do, right? It has to get above some key levels. So let's just quickly mark that out. First thing is the 50% level, right? You can see from the bottom of the range to the top of the range over here, that's coming at 4.78%, right? Not only is that a key level to break below to shift the momentum, but it's also your last major higher low, as well as that would essentially target you towards this, manipulated Trump pump that occurred over here, which of course has the inverse effect on the USDT dominance, right? But you can see over here, USDT dominance on the weekly is putting in that lower high structure, which is a good thing, right? It starts to look like a descending triangle, which these typically break towards the downside. But very, very similar to what we're seeing in both crypto and the stock market, the volume is the lifeblood of the market, right? This can warn you of traps, right? This is where traps come into play, is when you see those drops in volume, right? So pay attention to that. I think it is something to watch. If you can start to take out this big weekly move over here on the USDT dominance, that's probably really good for crypto. That level is coming in at 4.59%. Now, I'm not going to bring all those other charts up today, but do remember that from last week, or the weeks before, leading up into this move, we spoke about, remember, Bitcoin hasn't hit that key level of $72,000 yet, right? But what we did say is we saw total 2 and 3, which is, of course, got the weighting of the altcoin market, so it removes Bitcoin out of the picture. That has hit the equivalent of Bitcoin hitting 72K. It hit the key level, the key horizontals. Why am I even mentioning this? Why do I find it interesting? I find it interesting because of what this chart is doing, right? You genuinely may start to see a breakdown in the Bitcoin dominance over here, which could mean usually this only occurs in a risk-on environment, right? This is why you want to be at least looking for some of those long opportunities, because things may be shifting. Where did I first notice the fundamental shift or change within the markets? It was at the FOMC, because in the prior 3 months, every bit of news that came out was taken as bad news, right? Even if it was good news, price went down. If it was neutral news, price went down. If it was bad news, price went down even more. Then for the first time, it was the most recent FOMC, it was an absolute nothing burger. It was not good news. It wasn't bad news. It was slap bang in the middle. Price reacted towards the upside, right? This is reading the tape. It's showing you that fundamentally something different is happening, right? And now you're starting to see all these signs, right? You're seeing things like this starting to break down on BTC dominance. You've seen the tests in the total cryptocurrency market cap. You've now seen the hash ribbons buy indicator flash over here, which just increases the probability that the market is probably not gay. But it's probably going to be back on, right? There is a good chance that the market is going to be back on, right? But you need to reclaim some key levels. You don't want to front run these things or you're going to get absolutely rinsed, right? So stay tuned. Watch the show each and every single day. Of course, we are going to update you on everything. Also, make sure that you jump into the Bybit trading competition. You can win $1 million. And then you can use that user ID to come into Whale School, which does begin in 6 days, right? In 6 days' time, we begin with Whale School. That is on Monday. You don't need a credit card. You don't need any of that. You don't even have to pay the $2,000. You can unlock full access using that link in the description below. So the rest of you, I'll see you in Whale Room later for our live session. And that is it from me, folks. Thank you all so much for watching. I'll see you all on the next one. Have a great day and cheers for now.